Hello, fellow traders. 'Tis I, TheRumpledOne. Monday, June the 17th, the year 2019. Let's talk trading. Trading! The thing about trading is, I think it's misunderstood. There's so many myths around trading, so many old wives' tales. I mean, almost anybody gives you trading advice. I mean, the cab driver, the shoe shine boy, you know, you no matter where you go, it seems like somebody's going to offer you trading advice. And I'm telling you the truth, and that's the only reason why it's funny. But when you get down to it, trading something that's really personal. And each person has to find their way. And one of the things that most traders hear is about, you have to have a trading plan, and you have to have your trading rules, you have to have your trading system or your trading method, and you have to stick to it. Now that's pretty much true. Can't really argue with that. But where people fall down, I think, is that they really don't have a written plan. I mean, even if you know it in your head, like the back of your hand, it needs to be in writing. Because usually when you write, that's when you get clarity. I mean, if you ever, somebody try to explain something to you and they're just all over the place, they don't even complete a thought or a sentence, and you're trying to understand it, and it's just like you just walk away. It's like this person doesn't know what they're talking about. Even though they might be good at it or appear to be good at it, if they can't explain it as a process, a simple process, a step-by-step process, then they really don't know what they're talking about. I mean, that's a quote from Deming. If you can't explain it as a process, you don't know what you're talking about. And it goes into losing. I mean, if you can't explain your risk and money management as a process, you're done for. If you can't explain your method as a process, you're done for. And if you can't explain, the execution, your performance is going to suffer. And, it's just going to be a total mess. So, the takeaway is that you have to basically become methodical. You have to have that plan, that written plan, and then you have to execute, follow that plan. Because I read somewhere, if you don't follow your plan, you're relying on hope. It's a wish. It's you might as well buy a lottery ticket and hope your numbers hit. Because you see, if you put that money management in place, you know when to take your profit. And if you have that risk management in place, your downside is only going to be a certain amount. So let's just keep that in mind. And when it comes to money and risk management, we know the risk is the amount of money or percent of our portfolio we're willing to lose on any particular trade. We're not willing to lose a penny more than that. And so we adjust our position size and stop loss so it balances out to our risk. Okay, let's bring up the weekly chart here. You can see we still have two gaps that haven't filled. Yesterday, I clued you in. I said I added the purple pivot point dots to the weekly chart. And you can see here the pivot was at 122.12.2, and we had a high of 122.12.0. So technically it missed the pivot, but if you took that trade yesterday, I think you pocketed some very nice pips. And we look here at the analyze, the year-to-date analyze screen. You can see we're 345 pips below the yearly open, but we hit that previous day's midpoint right there. And so for the month, the week, and the day, we are green. As I mentioned yesterday, we opened inside the opening range for the month, that first day of the month range here. We shot out of it, and right now we're 31 pips above it, but total it was good for 48 pips if you nailed it. We're above the first trading day of June's open, but below the previous 11 months. And opening range, ditto, we're still above that first trading day of the month opening range, because we just saw how price shot out of it. And I showed you here that we had inside bar 15 days ago, and last week there was a couple of nice inside bar trades. Yesterday, I believe I alerted you to a couple of inside bar trades. And the euro, British pound, Australian dollar, Canadian dollar right there. And there's a couple of inside bar trades that are still to be had here on the week and the month. Range, nothing over 100. Maybe it's summertime. Maybe that's it. I mean, summer doesn't officially start till what, Saturday? But maybe they're getting ahead of the game. But the range just isn't there. And you can see on the daily, we got close to that upper daily wick zone from the previous day, but price has retreated 18 pips off of that high. Weekly holo, you can see high weekly holo, which is the highest open on the H1. That's the ho part, and the low part's down here, the holo, right? So you can see here we had price shooting up, coming back down through that wick, hits the holo, and now it's down off of that holo. Pivot traders, you were rewarded once again. I mentioned yesterday we took out the pivot. You came down here, a pro entry, gave opportunity here, hit the buy zone once again up. You see we've got a missed pivot point. We're 33 pips below it. Look for that to be taken out. But remember, traders, these videos are for educational purposes only. Your results may be different than mine. And the rat zone, you can see here, red rats looking to short. You know, I'm thinking that because volatility has seemed to dry up, we just don't seem to have the range. We might have to re-examine the statistics here on the rat zone. Maybe we need to move it to 15 pips, tighten it up a bit. Maybe 20 pips is giving it just too much room here. I'm thinking 10 pips might be way too tight, but maybe 15 would be okay. But that's why I've written tools so we don't have to think about it. We can analyze it and come to our conclusion. Once again, I mentioned about the weekly pivot. You can see here, it just missed it by just a couple. So I guess for some strange reason, this one's 129, 120. So that's almost missing by a pip there on the weekly. But still close enough. Had you gone from the open, tried to shoot for that weekly pivot, if you were managing the trade, you could have popped out at R1 or when price crossed below the high of this H4 candle here. You don't have to use H4, but I just show it on this screen. We took out the daily pivot here, and we've shown the pivots that need to be taken out for this year. Price action. You can see price doesn't like to stay in any of these zones. So if it opens in a zone right here, it left the zone. Open in the zone, tried to leave it. Open in the zone, left it. Open in the zone, left it. It's just real simple. We can play the balls. You have a 1 ball down here, green at the line long, 2 ball here, red at the line pro trade here. To me, it's very simple. Meaning, you have 1, 2, maybe 3 rules. And if the price action doesn't meet your rules, then you move on or you wait. If you're only trading one pair, you just wait. But it's hard to do. So if your trading plan, you can make a checklist, if it's 3 things. It's like here, price opens here, then I'm going long here, I'm going short there. That's it. Or I'm saying, no, I'm going to wait for a ball to appear. If a ball appears here, then I'm going to go green at the line long and red at the line here. If a ball appears at the top, then I'm going to go red at the line short. It's simple. It's not difficult. And you're worried about something, you don't have to worry. Why? Because you have your risk management in place. You put that stop loss there. You know what the worst thing that can happen is, and you're okay with it because you decided what the risk is. And you can see wick zone, it started below it, went in it, and it's out. Same on this chart. You see here, basically, only 1 trade signal on this chart. As far as the ticks go, you can see here, we had the ask cross below the peak of the bid, so price was heading down. Einstein line, you see had a long trigger there, a short trigger here. It's just not much happening. I'm looking at the frequency distribution of range, current range 56. 82% of the average. And so you see right here where we are. So just the other day, the average range was 70. So as we move along, we're looking at the last 100 bars. You can see, once again, volatility is dropping. Open or high to open and open to low frequency distribution. Once again, for the buy zone traders, looking here at the range, we actually got into the upper ATR range, which is a great place to take profit and a great place to look for reversals. And you see here the weekly open plus the ATR, half of the ATR2 was right here. And that's another good place to start taking profit. So that'll wrap up today, fellow traders. So thinking about trading, just remember, keep it simple, write it down, execute, use your stops, take profit when you can. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks this week.